Anish Damane, who's the head institutional equity at Emkay Global Financial Services, joins us on the show. Anish, good to have you. One event out the way in the election results. What do you think the market tone would be stepping into the budget?
I think if one were to look at what's happened in the elections, I think a lot has been written about it in the newspapers, and probably it will go exactly that way. But there are certain things which the government has to do because they have a huge fiscal deficit problem ahead of them. So what I feel is that budget is something which they need to pass as a fiscal bill, and they may not want to have too many things to happen on the budget day or in the bill. So what probably they will do is they will try and do whatever they want to do in these few days before the budget, or probably some things after the budget. So, for example, they had a railway freight increase of about effectively about 20% which they are sort of talking about. So, if you will see that these kind of things which are non-palatable or which are less friendly will happen before the budget or a little after the budget. So this is how I think this whole situation will be played out.
Anish, if indeed the budget shapes up as a few people are saying, a mere statement of accounts with a significant portion of the reforms being taken outside of the budget, and let's assume that happened, that's how the situation is. How do you position your portfolio? I mean, it's looking wobbly for the markets currently. Would you be betting a lot more on defensives, considering that the fear is that a lot more freebies would be doled out by this government in order to garner significant vote bank, considering the election results? Or would you still bet on growth stories even if they are expensive?
No, definitely. See, the primary substance of the equity rally or, so far last 1.5, 2 years has been the earnings growth story or earnings decline stories whenever there has been a fall. So clearly if earnings growth is seen somewhere in some portions of the market, then those are the stocks which people will continue to hold on to or continue to look to buy, or they will continue to be performers. Our take is the fact that I think this year the government may not dole out too many populist things because there is an issue about fiscal deficit and they have to rein that first before doing anything else. And they have 1 year to consolidate on that position, and probably next year which will be the year of elections, probably that's the time when they will be able to give out something. You see, public memory is very short, and therefore they may not want to utilize this right now and do it at an opportune time. So from the budget perspective, we feel that the budget will probably just tackle the issue of how to tweak the taxes, which will be on the higher side on both direct as well as indirect taxes, and then take the other things out of the budget. I'm not very sure as to how they will carry on the reforms process because a lot of things, even if they were to take it out of the budget, whether they'll find support from their so-called allies is an extremely difficult question to answer at this point of time. Markets don't like the uncertainty, and therefore we'll see that the markets will react to this. Also, to add to that, we believe that the earnings downgrade cycle is not yet over. So that will pan itself out over the next 4 quarters. So anyway, we have the pressure of the earnings not doing well over the next 4 quarters. So markets likely to remain under pressure.
What's playing on Reliance, Anish? It's pretty much given up all of the gains that it had, if any, back down to those 750 kind of levels. So what's happening here?
Yeah, one of the primary things about Reliance, if you look at it, while it is still not a very significant chunk of its valuations, or rather I would say not a very large part of its valuation, is its gas story. And gas story, every day we are hearing that outputs going lower and lower. So we don't know how the next 1 year is going to pan out in terms of how the news flow on that front would be. So that is something which was not factored in the price and is now coming into the price. Second thing is, if you were to look at it, the global demand scenario probably might look weaker as we go forward. So market probably is not trying to give too much of valuation to Reliance. However, they have a buyback in place, so which will keep the stock performance in check in the medium term, and hopefully they utilize that arrangement to buy the stock as and when it gets when it falls or when it gets cheaper. So if that's what they do, then you will have a floor to the stock, and we probably could see a floor somewhere around here at these prices.
What about the cap good stories, Anish? What would you do there, given that there's been sharp price erosion there as well?
The capital goods stories? That's
right.
See, we have not been in favor of cap goods stories. Only the fact is that in December 2011, the cap goods weightage in the total Nifty basket fell from about 8% to 5.5% probably. So that's the kind of bounce back which we are seeing, because the weights had fallen far too quickly and fallen quite aggressively. So there has been a bounce back. We don't see any improvement in the earnings stories of this stock, nor on the order book side. We continue to believe that India's capex cycle or the investment cycle is going to take a little longer time to recover than in the past, and hence we feel that capital goods stocks are something which you should continue to remain or should remain underweight in the portfolio.
Okay, just a couple of stocks that I want to point out. JP Associates is up 6% in the session. 74 is where that one is trading. So all the talk about how the change of guard could be negative is not shaping up that well. Wonder if that's the same case with the sugar companies. No, actually the sugar companies are now trading okay, so not too bad for them in the session. But the cap good one, JP Associates in particular, has not had a bad session in trade. Just wondering, Anish, what do you do with some of the sugar names? I mean, I don't know if you track them or no, but there's lots being spoken about how the UP mills, the fortunes could change now that there's a change of guard. Do you track this space at all?
I don't know. I think something is there to stay, because what is the problem with the sugar mills today is the farmers have been given a higher cane price, and probably they have not been able to sell sugar at a price which covers their cost. I think that is the major issue. I don't think the change in guard will in any way sort of jeopardize probably that position where the farmers are told to cut down their cane pricing. So the only thing which can happen is that probably there was a feeling in the market that the vendetta is against the sugar companies, and that vendetta probably may not be there at this point of time. So if they had fallen below book values or sharply below book values, they are recovering some of those gains is probably what could have happened. But the problem remains that till the time the international prices recover to a substantial amount, I don't know whether this will benefit these companies or not. We don't cover sugar sector in general, but this is what I believe is the basic problem or basic issue with the sugar industry.